Good afternoon, everybody. Welcome back to another year of trading with F45 Trading. Um, Happy to have you guys back. Happy to be back. It was a very, very long holiday. December was a great month. And actually, I managed to take part in the markets for a little bit earlier on in the month, but really just sort of relaxed with the family during Christmas and through the new year, and just getting back into the charts here, starting for the week of January 7th to the 11th. So things are going to be getting back to normal again, and our typical live weekly schedules are going to be starting again this Tuesday, London Open. I'll be on for a live session. And then Wednesday morning, Dave will be back, New York Open. And then I'll be back again for Thursday, New York Open, and Dave will be back in again to wrap up the week on Friday, trading the ES, gold, and a couple other Forex pairs and doing some reviews. So back to the regular scheduled broadcast as usual, and looking forward to this year. I think that we've got a lot of opportunities on the horizon, and I think it's going to be a good year of trading. And it all starts now with the analysis. So hopefully you guys did a little bit of studying over the break and got a little time off and took a look at what the potentials are. Hopefully you also took a look at some of those recorded videos that I did on the commodity series, if you remember. And just so you know, going forward, starting 2019, I'll be doing free recorded videos for the weekly ranges. And what I expect, I'll be posting those to YouTube, but all of our live analysis will be for members only. So if you want to take part in that, you'll have to jump over to f45trading.com, sign up with us, and jump in, and you can take advantage of those free trading sessions, live trading sessions, and all that good stuff. So just so you know, no longer will we be doing free live sessions. It will all be for members only. So go ahead and check that out if you're interested. And if not, well, then you'll still get these same great weekly reviews that I'll be putting out. So anyway, with that being said, let's have a look at the markets. I don't want to spend too much time on this video. Just do a real quick recap of where we were in December, where we could potentially be going for the month of January, and then we'll get a little bit more refined into it as the weeks progress into the month here. Actual trading really will get going more towards the middle of the month. We could see some jumpy price action this week, but I think by the time we get to the middle of the month, the 14th to the 21st, we should be back to regular trading price ranges, and price should be moving fairly fluidly from there. So just keep that in mind. And I bring that up just because of, obviously, I don't know if you guys were watching the charts, but last Thursday, we had some very interesting price action on the markets, and you can see some of the volatility that had occurred. This is Thursday. You look at that price dipping down in here on some pairs. For instance, this is the Canadian dollar. You can see price just fell right off last week on the Canadian dollar, and UJ. You can see big ranges in price here. The Australian dollar saw the same thing. So there are some pretty serious fluctuations in price on a couple of these pairs. So again, just keep that in mind. May still see that a little bit here for the interim till price sort of stabilizes itself and gets back to normal. So US dollar, we haven't had any changes in the interest rates on US dollar. They sort of kept the base rate the same, so which means they're not tightening it up, and they're not reducing it. So we could see price trending in consolidation for a little bit longer. And if you look at the overall price structure, it's actually been in a pretty tight range for the past few months and the latter part of last year, and only briefly running to the upside in the past about month and a half of trading. And then since then has just been very sort of prolonged, stagnated, and obviously this is December trading. But we can see we broke to the downside just last week. We ran this previous low rate here, and so far we've been failing to get any higher. So I'm kind of anticipating we could see price continue to run lower. I'll just zoom in a little bit here and put some levels on the chart. As I say, we just broke through this previous low rate here, and we'll see now we're coming back into this consolidation range in here. So we'll see what kind of reaction price gives us at this level. If we get a potential retest of these previous highs in here and then a run higher, or if price will just want to continue lower to the downside. We've got our second range coming in right around here that we'll be looking at. So we'll just maybe put these price tags up, might be easier for you on the charts, just to make sure that you kind of can identify the levels as to where I'm looking for price to run back down to. And then if those break, then obviously we've got a lot of confluence right down at this 93.40 level in here that I'd be interested to see if they want to run price down to. But they've left some relatively equal highs above price here. I think eventually they'll probably come back up and get those. May not be anytime soon. It could take them a couple of months to do that, especially if we see price cascade any lower. And especially if we take out this low rate here, we could see further move to the downside. And again, if you take a quick fib from low to high, we're still not quite at that 79% retracement level, which we typically see as a major retracement level on the downside. So we'll see how much strength they have to pull price down, and what happens when we get down to the 93 or high 94 level, and see if we see price stagnate there, and then maybe we'll see a return to the upside. But until then, I'm kind of thinking either sideways or bearish on the US dollar. So if that's the case, we move over to the Euro USD, and let me just clean this chart up for you guys a little bit here. I'm kind of thinking obviously the exact opposite. This has actually been a little bit more consolidation than what the US dollar has been doing. Yes, US dollar has been consolidating for sure, but as you can see, we have been experiencing more diverse trends in price to the upside and to the downside, versus the Euro USD has been very, very sideways. Yes, we've obviously had this nice big downtrend here that's been violated, but you can actually see prices really just starting to kind of walk a bit sideways and starting to compress into a bit of a wedge formation here. So we'll see how much they want to do there and how much more compression they want to apply to this price range. But I believe if we do see continued downside price activity on the dollar, it should pull the Euro USD higher, and we could potentially see some of these ranges above price here get run out. We do have a one range right here where you can see price came in, hit a high here of 114.98 and a high on this candle. I may not get the level on the menu to come up, but you can see at the bottom of my screen, high is 114.96. So it just failed by a couple of pips to get above this high here. Came down, swept all the lows under here, and so far a nice rejection on these levels. And we'll see what we want to do starting out the month here, but I think we could see this get pulled to the upside, potentially running those highs there, and maybe we'll see price even expand out, and depending on how much they want to run this, maybe up to the 115.50 level, and even higher. I wouldn't be surprised if they wanted to come run up into this area up in here, which would be more indicative of the 116.80 level. So we'll see what they want to do there. Again, we take a quick fib from high to low. We can see there's plenty of room to the upside for any type of retracement. Really major pivot in price if we get above this high here. So I wouldn't be expecting this high to get run out quite yet. But certainly I think the 115.50 is attainable to the upside if we do get a push higher. And you can obviously base your trading strategies off of that. So what I think my line in the sand would be on the lower end, if we start to break down, and we really start to break down, you can see how price came in, swung up in here, took out the high, and then ripped down below these lows here and rejected. I don't want to see price go any lower than that. So on the downside, if we start retrading back all the way back down to 11300 levels, I permit price to come down to it one more time. Don't want to see it go much lower than that. We may get something like this occurring where price just kind of stagnates a little bit here. But I would hope that we start to see price eventually break out to the upside. Don't want to see it go much lower than that. 11300, I think, even would be pretty much my line in the sand. If we started closing lower than that, not interested in any bullish move higher. And we'll probably be sitting on the sidelines waiting for this pair to figure out what it wants to do. But if we do see price on the US dollar running lower, it should pull the euro in the opposite direction. We could see that run up higher. So I'll be looking at getting some entries this week on this if we see this continue. But look at this price action. This really isn't really nice. I mean, look at this right in here. Very, very tight trading range. Got to be very nimble with your trades, in and out quickly. I honestly wouldn't even be holding for daily ranges necessarily on these. But certainly you can trade them. Once price takes out a previous low, you buy it until it takes out the previous high and you sell it. And that's really all it is, or to the next logical range anyway. So that's what I'm looking at on Euro USD. Pound dollar, been a little more volatile, as you can see. Had a big run in price last week, that to the tune of about a 220 pip range. So did a real good job of clearing out all the levels in price. Look at this, all of this level in here for the past 3 weeks through December. Early December, when it created the low, cleared all of that out, and again, right back to sort of the middle of the range. You can see here, price has really been in a bit of a range on the pound dollar. So again, if we do see lower prices on the US dollar, I wouldn't really expect them to be dragging price much lower on the pound dollar. But you got to be careful because the Brexit still hasn't been finalized. They're still back and forth. They have a whole bunch of voting and everything else left to do over there, and so we're not 100% sure exactly which way that's going to go yet. And to be continued, or to be determined, I guess, on what they want to do there. So lots of room to the upside on this. I wouldn't necessarily say that we've hit a reversal in direction yet, but I certainly would say that this big down candle right here would be indicative to a potential reversal. I'm not calling the low or anything like that. Price could very easily start running lower than this guy in here. Whoops, didn't mean to do that. Fix that up. But if these lows in here, so I think my line in the sand really would be these lows right here. As long as we don't start trading lower than those again, then I believe that we could see price run higher. And there's a lot of potential levels in here, as you can see. We had one little stop run right here. I grabbed a couple of these highs here, but failed to get above any of these. And there's lots of levels, certainly above price, where I think we could potentially see price extend out to, obviously here, here, and here. So going forward this week, I'd like to see price come down a little bit and potentially rebound somewhere in this area. So, and I'm going to keep it to the daily on this chart on the pound dollar for the most part. But 126.35 to 126.30, even 126.25, I think could be a range where maybe we'll see price retrace down to earlier in the week. I'd like to see it pick up and then do something like this in towards this area. So we'll see what happens when Monday and Tuesday open up, where they want to bring price down to, and see what kind of move we can get on that. Now, what I haven't done yet, which I'm going to do right now, as I just reminded myself, is the weekly economic calendar for the week coming up, Monday, January 7th. What kind of news we have here. For this week, would stay away from the Canadian dollar. We have a lot of monetary news reports coming out, Bank of Canada rate statements coming out for the Canadian dollar. So for sure, if you are trading the Canadian dollar, I would definitely not be trading it into Wednesday. I would probably elect to wait. And we've even got some FOMC news coming out on Thursday. So honestly, Wednesday and Thursday this week, not going to be great for trading. Could be a little bit volatile. That's why I say you may want to just hold off on your trades for this week and maybe wait until next week, till some of this volatility stills down a little bit. But I'll let you be the judge of that, obviously. And then into Friday, we've obviously got some high-impact news events for the pound. So not to say that Monday and Tuesday couldn't open up a couple of opportunities for us. There's no major news happening. IS non-manufacturing, obviously, for the US dollar, but for the most part, for the euro and for the pound, it's pretty devoid of any news, minus the Carney speaking on Wednesday. So potentially could lend for a setup or two to happen on the euro or the cable, so we'll watch for that. And again, U.S. CAD, I'll talk about this quickly. Again, we do have those rate announcements happening, and they, I believe, are going to be raising the interest rate, if I am not mistaken. We'll find out Wednesday for sure. They elected to hold interest rates in through December, and which is why we were kind of seeing price sort of stagnate there. But I think this is sort of their pricing in that anticipation of raising those interest rates, which is going to run price the opposite way. And so I think that's why we're seeing this. They're maybe starting to build that in a bit. On the daily, though, you can see a real deep retracement. They've given back basically almost the entire month of December's trading just in 2 opening days for January. So that's pretty huge. Now, if we're going to see continuation to the downside, continuation to the upside, if price is going to reverse and they're just coming in to gather up the stops, don't want to see them go much lower than 132.40, 132.30, sort of right around in here would be sort of my line in the sand. You know, they could come down and trade down to this level here for sure, and pick up a bunch of positions down here and then run that higher if they are going to remain bullish. But if they run lower than that, I think that's going to be it for me. I'd probably change my opinion to bearish on the US CAD and maybe look for lower prices. And that's only, again, if they do decide to raise interest rates, which could be very possible. So we'll see what they want to do. Watch this pair here. Don't trade it this week. I would stay away from this pair. But we could see some capitulation to the downside for the next little while. And if they do, that's great. I mean, we can obviously trade that. We just wait for them to retrace back up to a logical level, and then we could get in and trade the failure swing and then do this. No problem. But I want to see what they want to do after this week for the Canadian dollar, so no trade on this guy yet. UJ, again, another high volatility trading week last week. Look at the range that they gave up. Again, I'm on a daily chart here, and this is all the way back from April, May, June, July, August, September, October, November, and into December. You can see they just, in a span of, when did they start this downtrend? From the middle of December all the way to the first week of January, they literally erased almost the entire bullish range of 2018. Isn't that incredible? It took them almost, March 22nd to October 1st. 7 months, 8 months for them to run price up almost 1,000 pips on the US yen in order for them to erase all of those gains in 2 weeks. I mean, that's incredible. Almost a 900 pip range in 2 weeks. Highly manipulated, this pair. Very interesting. But you can see here where they're basing price off of. I mean, they came down and slammed right into this consolidation area right here. Right back in here. Ran all the way down, failed, and now she looks like it's starting to run back up. But I want to see what happens. Again, similar trading strategy as the Canadian dollar. We'll see what they want to do. We have a consolidation area in here. Let's see what they want to do if they do trade back up to this thing here. See if they want to base here and continue price to the downside here, or if they're just going to roll over and price falls off here, or if they trade back through this and want to get above price here. If we go out to the weekly, you can see we are in a bit of a range, but you can kind of see what they are doing here. It is a bit of a bullish range, right? As you can see, they slammed price down, ran it up, came back down, traded off that line, just failed to get above these highs here, came all the way back down, and it could just be very well just be a stop run lower in order to grab a bunch of levels and then just simply swing right back up to the upside and run all these levels in here. That could certainly be something that transpires for the 2019 trading schedule, but we'll see what they want to do. I want to just elect to wait and see what this pair does, and lots of time, there's no rush on this, guys, so don't be too eager to jump into these markets. Wait for price to figure out what it wants to do, and then get in from there. Okay. Crude oil I'm going to talk about real quickly. Pardon me. Just because I believe there could be an opportunity here on crude. Now, we are entering into historically seasonal bullish time for crude oil. I'm on a 4-hour. Let's go back to a daily. Price has cascaded quite deeply on crude oil, and really from early October to the end of December, just given up a massive, massive chunk of price from this. Look at this run up from May of 2017 all the way up to the highs in 2018, and just complete. I mean, it took 3 months to crush all that and give all of that back. So we'll see what they want to do here. I don't know if this is the low, or if they are going to come back down and sweep through and drive through that one more time. But if you look on the lower time frame on the 4-hour, they've come down 1, 2, 3, 4, 5, 6, 7, 8, 9 times in here and failed to go any lower. And they've started to explode to the upside here. So I'd like to see that. Again, we are coming into a historical bullish season in crude oil. And so I'd like to see if price wants to continue higher. What I'd like to see them do is do something like this, though, and then fail to get any lower than there, and then start to run higher. If price comes in and goes lower than 42.80 on crude oil, I'm not going to be interested. I'm going to say that price will probably continue to the downside. I'm not going to dial this in exactly, but 42.80, put that on your charts. If price goes lower than that, more than likely we're going to swing lower than this low here, and that downtrend is going to continue. But I would like them to come off of this high a little bit. I don't want to buy it here in the fear that they just run price into here. Crude oil is doing something very weird lately, and so I'm not 100% convinced that we're out of this bearish trend yet. It could just pop up into here, hit resistance, and then fall off. So I don't want to get into a situation of this and getting long here only to get stopped out if price makes a real weak attempt to get higher and then it runs down. So I'm going to wait on crude oil. I want to see if this price happens. And more than likely what we could see is this on crude oil. Price runs up, comes back down, sweeps under these lows, and then potentially see about gathering some longs up in here and then do something like that. This, to me, in my opinion, would be a much stronger entry at 43.88, 44, 43, 43.50, somewhere in and around there. I want to wait and see if we can't get an entry down there and then get long. Because I would rather be wrong down here and get an entry here and get stopped out here versus being wrong up here and waiting all the way down here to see if price comes down and then getting stopped out. That would be a bad trading strategy. So we just wait, sit on the sidelines until crude does what it's going to do. Creates its confirmation, and then getting in from there. So I apologize, guys. This video went on a little bit longer. I was going to talk a little bit about some crypto and some other things, but I'm going to elect to do that more so with my members and a little bit more into the live sessions. So if you guys want to get some more detailed information, you can come check us out at f45trading.com. There's several options on our website for you to take part with what we're doing, and I'll counsel you if you guys need any help with directional bias or overall market analysis. Please make sure you take part in those, because there's a lot of valuable information, a lot of setups we give to our members, and away we go. So anyway, thanks for watching. I hope you guys are as excited as I am getting back into 2019. Wish you good luck and in this year, and hopefully the markets are kind to you. So until next week for the free guys, I will talk to you then. For all of my members, we'll catch up with you guys for London Open Tuesday morning. Thanks, guys. We'll see you then.